Welcome to the GrowGeneration Benzinga January 2019 presentation. My name is Michael Salomon, co-founder and president, and Darren Lampert, our CEO and co-founder, will be presenting today. GrowGeneration is a publicly held company. Stock symbol is GRWG, trading on the OTCQX. GrowGeneration is the fastest and largest operator of a chain of hydroponic and organic garden centers throughout the United States. Since our inception, we started the company back in 2014. The company has been growing at a rate of over 100% year over year, selling thousands of products and servicing over tens of thousands of customers. This growth comes from two strategies. One, our M&A strategy, acquiring operations that have been in existence for several years that we're buying and aggregating under the GrowGeneration umbrella. And two, aggressively pursuing a greenfielding strategy of opening up stores in new locations. And here you can see some of the charts, and you can see that the growth has been 100% year over year, and we see that growth continuing in 2019. The pie chart shows you the types of products that we're selling. The consumable side of our business is about a third of our business, which is the nutrients. What do we do? You know, people ask us, what is GrowGeneration? And in a nutshell, we sell product. We sell product every single day. Each one of our stores is profitable and generating sales each and every day. The essence of what GrowGeneration is, we are a supply chain, a critical supply chain that reaches every single cannabis and now hemp farmer in the United States in a just-in-time method. We have 20 locations in 8 states. We can deliver purchasing solutions to all licensed growers, either same day or within 24 hours. The true backbone of the company is really the managers that have cultivation expertise, product expertise, that really deliver solutions. We are a true solution provider to all of our customers, which is one of the main reasons why they continue to come back and shop with us. With hyper growth comes infrastructure. We've been investing in infrastructure really since we started the company. Today we have a team of over 125, and we'll show you the org chart shortly, from every department: sales, purchasing, logistics, technology, accounting. This infrastructure, this foundation allows the company to scale itself into the hundreds of millions of dollars. That investment is done. Corporate structure. Under the public company, we have 5 wholly owned subsidiaries. Each one of these subsidiaries is really the corporate initiative that we've outlined for 2019 into 2020. Expansion into Canada, international markets. We will be in Canada within the next quarter or so, which will be contributing revenue to the overall company. Our commercial management corp is made up of an outside dedicated sales team that's exclusively responsible for bringing in new capital projects. Today we have over $5 million of backlog of capital projects that we're quoting and closing on. Our hemp corp was set up to really mirror what we've done on the cannabis side, to create a supply chain that's now emerging with these hemp farmers that are coming on board, and we're bringing on new business every day in that particular vertical channel. Our distribution corp was set up to develop internally. We have so much information in terms of what the growers need and use and what's working from the product side, that we are now creating proprietary brands that are basically in reaction to what the growers are looking for, to lower their costs, lower their inputs, and increase their yield and make them more efficient. That's the partnership that we've bridged with our customers. And lastly, we're creating an e-commerce strategy that connects all of our locations, to an online platform, which I'll talk about in a second. Here's the map. The map is basically 20 locations which represent operations right now today in California, Colorado, Nevada, Oklahoma, Michigan, Rhode Island, Maine, serving tens of thousands of customers just in time. Following the legal regulatory path in 2019, the company is planning to open up new locations in Missouri, and we're very predictive in the way we do this. We're there, just as these markets are opening up, to be in a first mover position. Missouri, New Jersey, New York, who's been in the news today. And through our M&A strategy, we've already closed on deals that will bring in an incremental $12 million of incremental revenue to the company in the first quarter of this year, adding 3 additional locations. Our org chart, which is led by Darren, our CEO, has now been built to regionalize the business. We have vice presidents across each region, who manage all the locations, combined with a very seasoned professional team across all the departments that, as I said earlier, is now in place. We've been called the Home Depot of cannabis. I mean, you can see they're big warehouses. Each location is on an average of about 10,000 square feet. We house, on average, about $500,000 per location. And we basically house what sells. So we're basically, buying what we're selling. And that inventory turns every 90 days. We have a staff that is made up of a sales, logistics, and management team in each one of the locations, which is really our in-market solution. So we're invested where the growers are. Each one of these locations has been identified to be where the growers are. So we're right on the ground level with these growers, working hand in hand with them, which creates a very symbiotic and close relationship, with our customers. This is still some of the other locations that we have. Marketing is very simple. Our objectives are twofold: drive more customers to our locations, and 2, to acquire more commercial customers. We do that through a variety of marketing strategies, billboards. You can see we have in most of our markets, digital marketing, social media, which is going to be a big investment, trade shows. We deliver, so we wrap, most of our vehicles. And that's been a big push, which ties into my last slide, which is the omni-channel strategy. The big initiative for 2019 was the implementation of an ERP system, which we're in the process of deploying, combining that with connecting our customers to our company. We started with an acquisition in the late part of last year with a company called HeavyGardens.com, which is doing about $3 million of online sales. That technology platform is now being connected to all of our locations. So our customers will be connected, whether it's online, coming to one of the stores, they'll be able to shop in a multitude of methodologies, as well as search our inventory. We're developing a video chat component. Because of the nature of our business, there's a lot of consultative selling going on. If we can connect our staff to our customers in real time, we think that's a very dynamic strategy that will be very unique in this market, and an innovative way to sell. And we're also connecting our accounting and our back office, so all customers will be able to follow the flow of their invoices and shipments right to their facilities. And we consolidate, which is a big deal for these multi-state operators. They want all their locations to be separately billed, but on a consolidated statement. And our accounting department is sophisticated to do that. With a scalable business and the foundation in place leads us to financial performance, which is led by our CEO, Darren Lampert, who will discuss now the financial performance of the company, the key performance metrics, the corporate structure, and really the public company, which is, I think, why we're all here today, to learn more about our strategies of building a company from 2014 to today, and how we did it, and where this company is going as a public company. Darren, thank you.
Thank you, Michael. What a wonderful event. Wonderful to see everyone still awake at 4:30 probably after a late night. I'm going to try to run through this really quickly so we give you guys a couple minutes of questions. Investment considerations. The one question I hear every day from some of our shareholders is, why is our stock trading where it's trading? You know, most of our investors think our stock is cheap. So for investment consideration, I'm going to go through a few things with everybody. We are probably the only public company right now linked to the cannabis space that trades at almost 1 times revenue, that's growing 100% year over year. We've been growing revenue since 2014. We've been doubling revenue every year, and we don't see that slowing down. Our mission statement back in 2014, when we put it out there before we knew the industry and before we got involved in the industry, was to build the largest chain of warehouse locations that supplied just-in-time inventory in the legal, commercial, cultivation markets. And you know, it's kind of incredible that in 4 years we've reached that goal. We've seen many stores close in the last 4 years in the fastest growing industry out there, but also an industry that's consolidating. And everyone asks, you know, why are you still standing? GrowGen is run by experienced businessmen with a tremendous staff of growers that understand the vision of GrowGen. And it was a vision that Michael and I set forth, and we're well into, you know, the second innings in a nine inning ball game. And again, the sky's the limit for this company. And we always look at our stock that it'll take care of itself, you know, as we continue to grow and do what we say. A year-over-year growth for the last 4 years, as I just said, it's been 100%. We currently have $14 million cash in the bank, and our M&A model is proven. We're consolidating a fragmented industry. And just kind of as some of the metrics that we've seen. To date, GrowGeneration since 2014 has raised about $28 million. We still have about $14 million on our balance sheet that we are putting to work in the first and second quarters of this year. The $14 million that we've put to work gets us to about $30 million in revenue in 2018. And as we said, you know, expanding, you know, doubling again in 2019. The $14 million that we put to work, out of that we have about $11 million in inventory sitting on our books. We have a couple $1 million of assets that we've purchased to open our 20 stores. So it costs us about $1 million to get to a $30 million run rate and get there profitably. We've built an incredible infrastructure, and we've done it free of charge to the shareholders. So when we look at this company, we think it's just an unbelievable value on a go-forward basis if you believe in the cannabis space. This is our proven track record. These are some of the transactions that we've done over the last 4 years that, again, are continuing to 2019 and 2020. We have the ability to both open stores and purchase stores. We can open a store within 45 days of signing a lease, and again, we could purchase a store usually within 45 days after some due diligence. Just, you know, a quick overview. 2014 is when we started. We bought a small 3-store chain out in Pueblo, Colorado that was doing about $2 million in business. That small chain right now, we've consolidated it. We've turned it into 2 stores, and we're seeing about $3 million of revenue 4 years later from those stores. 2015, we bought a small store. Again, we were undercapitalized at the time. That store was Happy Grow Lucky in Conifer. That store was doing about $470,000. We paid $60,000 for that store. That store currently is about 2,500 square feet. It's right next to Red Rocks. Anyone that's been out to Colorado, Red Rocks is one of the most beautiful places you'll ever be. But that store right now is doing about $1.5 million a year in business and earning about $250,000 for a $60,000 inventory investment. So you can kind of see the roll-up strategy and the power that we can bring to this. 2016. I guess we must have been sleeping, but see that or we missed something. 2017, again, was kind of a slow year. It was a year for us to gather what was going on in the industry. The industry was changing so quickly. And we kind of took what we did in 14, 15, and 16 and tried to understand it while still growing the business. 2018 is when we got capitalized. In 2018, we raised about $25 million. Most of it came in institutionally. It came in from 3 large funds out there, Gotham Green, which is run by Jason Adler, who was the chairman and founder of Kronos, who also came from Navy Capital, Sean Stiefel, who is on our board, who's been here the last couple days speaking, an extremely talented investor. And these individuals bought pretty close to where the stock is trading now. And the third group that's involved with us is Merida Capital, also has a board seat. Mitch Barukowitz has been talking the last couple of days here also. So certainly a very talented group of consultants working with us that we speak with on a daily basis. If you look at through our 2018 transactions, the first transaction was East Coast Hydro. It's a $5 million store in Warwick, Rhode Island. We've owned it for a year. The store earns about $1 million. Purchase price for that store, so we can kind of get metrics, we paid $800,000 above inventory, which was about $1 million, and we gave 250,000 shares of our stock. So you're looking at about a 1.5-year payback on the goodwill portion of that plus inventory. Our second purchase was Humboldt Depot. It's up in Arcata. It's a 2-store chain. They do about $4 million a year. They earn about $400,000, earning about 10%. We paid $400,000 over inventory of $500,000 for that store. We followed it up with Central Coast Garden. They do about $2.5 million in business. It was an inventory purchase for us. No goodwill. That was the 9 yards of it. Superior Grower Supply was a 3-store chain out in Michigan, 1 store in Livonia, 2 in Lansing. It's been a group that's been in business since 1982. Jeff Gibson, who sold us the stores, is one of the founders of this industry. If you ever went back and looked at some of the pictures from 1982, he started it in this little shack. Those stores do about $4 million a year. We paid $250,000 over inventory and 75,000 shares of stock. The beautiful part about Superior Growers, we see that group, off a $4 million run rate when we purchase it. We're looking to between $6 and $8 million in 2019 for that group. Our Michigan stores are exploding. Santa Rosa Hydroponics is the largest store in Northern California. It's an iconic store that's they're located right off the 105? The 105, I mean, it's right on the highway. It's just a magnificent piece of property. They do about $7.5 million in business a year, if not more, earning about $1.5 million. It's been incredibly profitable from the beginning. We just recently consolidated one of our Santa Rosa stores. We're just in the midst of leasing out the premises we left. So again, it was a purchase with a consolidation. It was a wonderful transaction. That store cost us $1 million over inventory and 800,000 shares of stock. It was our most expensive transaction to date. And again, we look to probably recoup the money we spent in about a 2-year time frame on that store. Besides those transactions, what we've also done this year is we opened a store in Oklahoma City in the beginning of October. We signed a lease right after they went medically legal. We signed a lease in August, opened that store October 1. That store right now is on a $4 million run rate, and it's been open for 3 months. It's been an incredible transaction for us, an incredible store opening. And what we do, by the way, this store, we set one of our assistant managers from Colorado to run that store. A lot of our new store openings, we use internal, we hire from within. So individuals understand when they work at GrowGen, there's plenty of room for advancement. We currently also, in 2018, we signed a lease for a Tulsa store about an hour outside of Oklahoma City, which will be opening next week. We've also recently signed a lease in Maine, so we'll be opening a store in Maine. So again, it was a pretty busy 2018, and we think 2019 will mirror it, if not get better. Fueling growth to 100 million in revenue by 2010. Shit. Store acquisitions, we have 3 scheduled for the first quarter. Also opening our Tulsa store, also opening our Maine store. We certainly look to, it's about $15 million in new store openings and acquisitions, refilling stores, and also working on preferred distributor products. We're starting to bring in products and we're starting to sign distribution agreements. Cash flow operating models. One of the beautiful things whenever, again, looking at financial performance, gross margins, we look to go from 27 to 28% in 2019. Operating expenses are dropping 16 to 15%. Operating profits 11 to 13%, and G&A is dropping. Net profit will be about 7% in 2019. Free cash flow today is about $1 million a quarter and increasing to $1.5 million in 2019. This is just some metrics, pretty simple. Raised $19 million in 2018, private equity backed, $14 million cash in the bank, about $14 million in paid inventory, net worth over $25 million. We've recently filed a NASDAQ application. We will be hearing back probably in the next month or so, and we think it'll be an ongoing, certainly ongoing conversations, and without really any, we still are optimistic, and we will keep everyone apprised of that. Market cap currently about $75 million. Leadership and strategic investments, investors, I'm the CEO. We just heard from Michael. We have an extremely talented management group. And again, one of the outliers here is, again, our strategic investors, Merida, Gotham, and Navy. We have the cream of the crop of investors that are, again, have all invested pretty close to where the stock is trading right now. So there's plenty of opportunity for plenty of upside in GrowGen going into 2019. I think we got about 0 seconds for questions. I'm sorry.